Hello again and welcome back. Next we will have the real estate company Eastnine presenting. And with no further ado, I leave it over to the CEO and CFO.
Thank you very much. My name is Kestutis Sasnauskas, and with me
Britt-Marie Nyman.
And today we have a pleasure to present you Eastnine and our case. So if we move to next page. On today's presentation, we'll just give you a brief. We'll tell you about the market, why we consider Baltics being so exciting investment opportunity, and we will talk more about details of our company. So if we move to next page. What is Eastnine in brief? Eastnine is actually the Swedish-listed company, a real estate company focusing on offices in prime locations in the Baltic capitals. So even if we are listed in Stockholm, actually our entire business is focused on the Baltics. But actually within our tenant base, it is very much Nordic as well. So we have a combination, a very nice combination of very much underlying Nordic European exposure with very attractive Baltic assets. And they also have certain features that we consider being very, very attractive. Our total property value today is 374 million. It's slightly higher now because we made recent acquisitions that were announced. Those are the figures from the first quarter. Our total assets are around 500 million euros. Our rental income is around 21. LTV 36% on the total portfolio and 46% on direct assets. In total, we manage today 120,000 square meters of prime office space, both in Vilnius and Riga. And here comes one of the most exciting parts is actually that our property portfolio is valued at 3,100 euros per square meter. So just above 30,000 SEK per square meter. And those are the most prime locations, and those are very prime assets. Market cap 2.8 billion SEK, and we have a very high surplus ratio of 90%. And we will tell more about it further in the presentation. Let's move to the next page. So why we feel that Baltics are so exciting? And it's actually a combination of a number of factors. If we just look on the map, you can see that the three Baltic capitals are actually among the top 10 largest cities in the Nordics. If we look on the region as itself, with 6 million people, it's actually bigger than Finland, it's bigger than Norway, and it's bigger than Denmark. So we have a quite significant portion of the Nordic population actually living in this area. But today we're still having yield levels 200 to 300 basis points above Nordic levels, and we are talking about prime. And we also are in a significantly lower rental rate level. So this combination of higher yields, low rental levels, still creates very low property prices today. And of course, this is combined with the Nordic financing gives you one of the highest spreads between the financing cost and actually the direct yield that we receive. If we move to next page, in general, the Baltic market has been developing very, very positively and very rapidly. So since the independence back in the early 90s, the Baltic markets have actually started gradually to grow towards the Nordics, and this convergence process that has been going on is actually ongoing, and today is becoming faster and faster. If we look 15 years back, the Baltics have been growing approximately 3 times the speed of the Nordics. If we look 5 years back, the same, and if we even look today, this speed is continuous. If you look on the office segment as such, Baltics have also emerged from very low levels to now becoming a more attractive investable universe. but still relatively undeveloped market. And if we look at office space offering today in the market in the Nordics, which is closer to 5 square meters per inhabitant, we are at around level of 0.7 to 1.2. So still structurally, we are still very, very much behind the Nordic levels, which also creates a quite positive environment for the future office development overall. If we move to the next page. So shortly about the last quarter and what has been happening in our company. We had a relatively stable quarter. We continue growing due to larger portfolio. We have some vacancies in Riga, some increase, but there's not so much related to COVID. They are more related to our plans of development of certain properties. Our other investment, Melon Fashion Group, keeps delivering and growing very, very rapidly, and we're very happy for that. And we also announced 2 recent acquisitions, one in Riga and one in Vilnius. Let's move to the next page. And here are our next one, our acquisitions. So we did 2 acquisitions after the closure of the quarter, one in Vilnius and one in Riga. The one in Vilnius complements very much our cluster in an area called Detta, next to other 2 properties. And Zala 1 is very nearby to our other property called Valdemara. If we move to the next page, we can see them actually in a bit better way. So all of our properties today, you see here on the pictures, they are all very modern. They are all environmentally certified, almost all, one with the exception of one in this picture. It's called Vertas 2, but it's in the process. And all of them are also among the top highest brackets of each of the systems, either LEED Platinum or BREEAM Excellent. So those are very, very modern, very nice properties. They're all situated in this greenish, bluish area with the bigger numbers 1, 2, and 3. And these are the 3 clusters. And each cluster is, the 1 and 2 is around 40,000 square meters, and number 3 is a bit smaller but more central, is around 24,000 square meters. And actually, we strategically try to cluster all those properties closer to each other to be able to actually work with our tenants in more efficient manner. If we move to Riga, next page. Here you can see our properties. Riga has a bit of a different spread in the market, so offices are more widely spread. There is no very clear CBD formed yet in Riga, but we believe that that area will be around where we are, around the central street called Kristiana Valdemara, where all of our properties are actually situated today. And with the most central being number 1, Valdemara Centris is the most central location for offices in Riga. And you can see Zala being just behind it, just a couple of 100 meters behind. Number 3 called Alojas Biroji. It's a former headquarters of Nordea in Riga, and now Nordea has merged its operation with DNB Nor. It's called Luminor. So this is now a multi-tenant property right now. We have 2 exciting projects in Riga. One is called The Pine, which is the first wooden construction, wooden office building construction to be started hopefully this year already, and the Kino project, which we are now in the architectural competition and working on the design. If we move to the next page. Here is shortly about our 2 other holdings. We still have historic holdings of Melon Fashion Group, which is a Russian fashion retailer, and it's performing exceptionally well. Eastnine holds 36% in it, and during the first quarter, Melon continued growing. As you all know, it performed very strongly during last year, despite the pandemic and all the turbulences that the market has incurred. But even this year, Melon continues growing 35%. Online sales stand for 32% and continue growing faster than the traditional network. And company is actually posting very nice profits, and the company also declared a dividend, which we expect actually any day now of around 3 million euros. If we look on the other holdings, we still have a story holding in East Capital's property fund number 2, and that holding has been performing quite well. It is in the divestment phase, and we also hope to get proceeds of it shortly and reinvest them into our other portfolio. If we move to the next page. So from my last but not the least, it's actually sustainability work that we do. Since we started, sustainability work is actually at our central part of our DNA, and we've been working very, very actively by promoting, but also introducing all the measures in all of our properties towards more sustainable future. We also are ranked among top 20% among our peers in real estate globally for our sustainability work by GRESB. Our financing framework is ranked by Cicero at dark green and excellent. 87% of our portfolio is actually either LEED Platinum or BREEAM Excellent certified. It's actually only two properties that are not certified at the moment, but are in the process. And if we look on the 2 acquisitions, they are both actually LEED Platinum properties as well. So that figure will only increase. We're also among the top ranked companies in terms of gender equality among Swedish listed companies by Allbright's Foundation. And we also implemented green leases in Vilnius already. And 95% also enjoy 95% trust index amongst our employees at a great place to work. So we have a very strong, very motivated team to continue developing this company further. And now I'll leave to Britt-Marie.
Thank you, Kestutis. And we continue with the income statements. Most figures, including the rental income, increased during the quarter due to a larger property portfolio. In a comparable portfolio, the rental income decreased by 7% though. As we said, we have higher vacancies in Riga, partly due to vacating of a building and partly due to taking longer time to relet during the pandemic. Central administration costs increased mainly due to non-recurring costs, and we had only minor positive unrealized value changes during the quarter, both for properties and other investments. We didn't receive any dividend from investments during the first quarter, but we will, as we have mentioned before, receive dividend from MFG within a day or 2 now. We continue with the key figures. For the first quarter, the occupancy rate was high, slightly lower than at year-end though. The surplus ratio is still on a high level, 90%, which is a really high figure compared to real estate companies operating on the Swedish market, when 70% is quite normal. This is due to a high degree of triple net leases in the Baltics, and the Baltics triple net leases are much better than the Swedish ones. The average rent level is 15 euro per square meter and month, and that is about the same level as at year-end. And it's around 2,000 SEK per year. The LTV is low, doesn't depend on whether you compare all assets or the properties, 36% and 46%, and hasn't changed since year-end. The return on equity is positive. It was negative during the first quarter last year due to negative unrealized value changes, and earnings per share is also positive again. Profit from property management is on the same level as during the first quarter last year. Equity per share and long-term equity per share has increased by 2 to 4%, depending on comparing in euro or in SEK. We can continue with the current earning capacity. And this is a truly important page if you are looking into a growing company. This doesn't show, this isn't a prognosis. It shows the capacity to earn money for the coming 12 months based on current agreements and certain assumptions. And we compare the end of March with the end of December last year. And since we didn't take possession of any new properties during this quarter, the figures haven't changed that much. But we can see that the rental value has decreased slightly, and this is since we vacated this building in Riga. And we have the vacancies in Riga has increased, and the vacancy value has also increased thereby. The rental income is slightly lower, and so is the net operating income. Central administration on the same level as the interest expenses, and profit from property management slightly lower. The prospective yield level has fallen due to the higher property value and also due to lower net operating income. We can continue with the share and the shareholder list. We have on this page the 15 largest shareholders in the company, and we have had small changes during the first quarter. Patrik Brummer has bought some shares, and ICA Förbund has increased their shareholding. The market cap was 2.8 billion, and this is based on the share price by the end of March at around 126 SEK. We have slightly less than 5,000 shareholders, of which 3/4 are Swedish, and we are traded with a discount. We can continue with next page, profit and value increase. And on the first chart, you can see the profit from property management per share. And as you can see, in 2017, we had a negative figure, but we have gone through a transformation process, and this has also increased the profit from property management. But the increase is also due to increased efficiency since we have increased the volume. We continue with the dividend per share in the middle chart, and you can see that it has increased from slightly more than 0.2 in 2017 to around 0.3 euro per share in last year. And we have a dividend policy saying that the dividend should be at least 50% of profit from property management after current tax. And for 2020, it was 66%, divided on 4 occasions. And the last chart on this page is the long-term equity per share, and it has increased from around 11 euro per share in 2017 to nearly 15 in 2020. Over to you, Kestutis.
Okay, thank you very much. So just to summarize why we feel that Eastnine is a so exciting story. Actually, through all these years, we assembled a unique portfolio of prime properties in prime locations in the Baltic capitals. Those properties are inhabited by prime tenants, very much Nordic institutions, financial institutions, telecom, IT companies, very much international businesses. And of course, those properties generate a stable and very strong cash flow. We also work very, very hard on sustainability, and we are actually leading that way in the Baltics, and we see more and more people follow us. And we hope that you can join our journey as well. And in terms of journey, we see in front of us a very exciting future. The Baltics actually is growing. We have an ambitious plan to double our portfolio, but also we have this gradual convergence that is going on, and I believe that it will only accelerate in the future, since we still have a very, very big nominal gap between the countries, between the regions, and this underlying growth is actually set to a very exciting journey, especially owning real assets like properties. So on this, we finish our presentation and we are open for questions. Victor, over to you.
Yes, thank you.
Thank you.
I will start with your earnings capacity. And for Q1, you had your net operating income. If you look at it for the full year 2021, assuming that would be growth of 5.7% in net operating income and 8.5% in income from property management. If we then fast forward to 2022, looking back at this year, do you think it will deviate a lot from these numbers?
Yes. Since we have a plan to increase the company and buy more properties, because it will.
And besides from just the great acquisitions that you just announced, is there anything else?
There's much more to come.
And in terms of development versus acquisitions, is it like a 50-50 divide looking forward, or is that hard to?
We haven't set a target because usually if you look on our target to do it within 3 years, so most actually of that growth will come from acquisition still. And we have a very clear pipeline. We see very clearly how we can achieve those targets. When it comes to development, of course, those will add on significantly if you look especially in Riga, but those will probably come at the end of the period or later, even later than that period. So over the time, we will build up that portfolio, but it will not happen as fast. So developments will take longer time.
And for renegotiated rents for the quarter, it was flat in Q1. Could you say anything on what you think for Q2, 3, and 4 this year?
The market has been stable, but we can also see that there hasn't been that many renegotiations during the first quarter. And since the market is opening slowly from, I guess, now on and forward, the situation could improve, I would say.
So in general, I mean, we see a relatively stable situation in Vilnius. Our occupancy in Vilnius is at 97%, so it's still very, very high. And it's really hard will be hard to stay with that figure. Of course, vacancies in Riga are a bit higher, but those are a little bit self-inflicted in a way that we did some planning issues for the development of some properties, and now it takes a little bit longer to lease out, of course. But in general, maybe somewhat weaker development in Riga in general, but still we feel that the situation will improve once people are actually able to physically come and visit the property.
And in terms of Riga and the development portfolio, do you need a certain degree of pre-letting ratio before you sign contracts or before you start constructing the building?
Yeah, we generally prefer have a significant portion let out before we start constructing. Of course, we're looking into Riga right now, and we are in the process of letting the properties out. So we are in the process, but we didn't set a concrete figure, but somewhere around 50% at least.
Yeah. And on what kind of yield on cost could you say on average for development?
Construction costs are growing actually these days, so it's difficult to say. But we were planning it around 7% yield to cost on this property at least.
And the short-term yield outlook seems relatively stable. For more long-term, or if we say like this, what needs to happen for the yield to come down markedly in 2 years from now?
I think in general what we've seen is that if we look on the Baltics today, Vilnius is the biggest market today in terms of offices and has been also probably the most liquid over the past years. And the size, liquidity, and the number of tenants actually makes it much more you see high yield compression, so it's much more competitive, and of course you see the yield compression there.
Yeah.
And if you look to Warsaw, for instance, Warsaw has added quite a lot of capacity. It's a bigger city, and we've seen yields compressing both with a growing portfolio of properties. As well, we've seen also the positive rent development there. So it's not, we need basically higher volumes for higher liquidity, and then probably that will be reflected in the yields. So the growth of the market is actually very, very important. And as you could see on the graphs, I mean, it has been growing quite fast. And there is more add-on. Vilnius continues growing actually in terms of offices still nicely.
Time's up for today, unfortunately, but always nice to have you two on, and thanks for today.
Thank you very much. Thank you.